Show an early signs of institutional interest as enterprise AI spending moves from experimentation toward operational deployment, heading into 2026. As enterprise AI spending moves from experimentation toward operational deployment, heading into 2026. A recurring question for long-term investors is where durable value may emerge once hype fades and capital becomes more selective. And that brings us to UiPath Inc., NYSE. Path, a mid-cap software company focused on robotic process automation and enterprise workflow orchestration, which some investors are examining as it trades around the $18 range and shows signs of renewed institutional attention in public ownership, filings and earnings call commentary. In this video, we take a neutral, data-driven look at UiPath's fundamentals. And its AI exposure is direct, as machine learning and software that helps large organizations automate repetitive digital tasks. And its AI exposure is direct, as machine learning and generative AI are increasingly embedded into its automation platform to enable document understanding and agent-based workflows, rather than simple rule-based bots. From a fundamental standpoint, UiPath has reported consistent revenue growth over recent fiscal years, according to its SEC filings, with a business model centered on annual recurring revenue and enterprise contracts, while profitability remains a work in progress as the company prioritizes R&D and go-to-market investment. However, it has maintained a relatively strong balance sheet with a sizable cash position and limited long-term debt. The board reduces near-term financing risk and provides operational flexibility, as discussed in its latest earnings materials. VI growth thesis rests on the idea that as enterprises adopt AI at scale, where automation becomes the connective layer between models and real-world business processes, positioning UiPath as an infrastructure-level enabler rather than a speculative AI application. Supported by industry tailwinds, such as cost optimization, labor constraints, and the need to integrate AI safely into regulated environments. That said, risks are material and must be weighed carefully. UiPath operates in a highly competitive landscape that includes large platform vendors. Execution risk remains as the company works towards sustained profitability. Share-based compensation and potential dilution are ongoing considerations. Enterprise software spending can be cyclical and sensitive to macroeconomic conditions and budget scrutiny. Over the short term, the stock may remain volatile due to earnings variability and shifting sentiment toward AI-related names. While over the long-term outcomes depend on management execution, competitive positioning, and whether AI-driven automation translates into durable free cash flow, rather than just revenue growth. This video is for educational purposes only. This is not financial advice, and viewers should conduct their own research or consult a licensed financial advisor before making any investment decisions. In conclusion, UiPath presents a mix of credible enterprise adoption, clear AI relevance, O2s, and financial resilience alongside meaningful competitive and execution risks. And while it may warrant monitoring by long-term fundamentals-focused investors, there is no